Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on MJ. Pretty eventful day in the space. We had a lot of names showing some bullish action. CGC will start it off, continuing to look extremely healthy on the daily time frame. And again, SPY looks very similar on the daily chart. Both had an inside bar today. Both closed fairly strong. And we're going to be watching, can the bulls follow through and break resistance? 44.60 and 45.20 are the key resistance levels to be watching, and the bulls want to see a volume spike and over 10 million shares traded if we're going to get a clear bull break. We've been watching WEED because it has an extra day of trading this week and more information, and we've been pointing out this 4-hour uptrend and saying that if this 4-hour uptrend breaks, we're going to be looking for daily consolidation, and the bottom line is it has not broken. Key support was 56.60, then 56.84. We held that level today, and now we're looking up towards resistances. So as long as the 4-hour higher lows remain, the bulls are absolutely in full control in the driver's seat, and a pretty solid day today. We'll see if the bulls can follow through with that. A little bit of weakness after hours in the S&P 500. We're down about 50 cents on SPY and seeing slightly lower numbers here, but uneventful. CGC right now down about 10-15 cents. Not significant, but just worth noting a little bit of weakness after hours comparative to the strong closes that we had. So still watching those 4-hour uptrends. ACB was top watch for me today, and today's my day off, so I wasn't trading today. So I did not take this ACB trade, but got a bunch of messages, so glad to see that a lot of you all did jump in on this trade. So what we were looking for on the hourly time frame is the hourly trend change to indicate that the daily higher low has been established. We knew that the daily higher low was going to be coming sooner rather than later because we had seen 5 days of consolidation. The bearish descent had slowed. Volume was starting to dry up a little bit, and I drew this descending triangle pattern on the hourly time frame, which I was keeping an eye on, and that was utilizing downtrend resistance. And I was actually using the US ticker, which had a little bit more data from some extended hours levels, but that's essentially what I was watching, this 3-day, 4-day descending triangle pattern, and the bulls broke resistance first thing and then saw follow through in a strong close into the end of the day. So now from here, we're not going to be looking for any kind of, surge back to the highs. We're going to be looking for a daily equilibrium. So solid day, solid close, but we're looking for a lower high compared to 997 and for a tightening range. So we have our high at 997. Our low of consolidation is now key short-term support of 817, and we're going to look for a lower high, perhaps in the low $9 range. And when we lose the hourly uptrend, we'll be confident that our daily lower high has been established. At this point, hourly chart has not established a clear support level since 817. So next time we consolidate, we'll anticipate an hourly higher low is going to form, but we have to see that higher low and then higher high in order for the trend to continue. But again, lose the hourly uptrend and the daily lower high will be set, and the tightening range is likely into February. Cron Bulls had a standout day as well today. Here's another one where consolidation was brief. The daily momentum shifted very quickly, and you have to use extended hours here. Again, if you look without extended hours on the US ticker for Cron, it looks like we just hit 1409 and then V-shaped recovery. But if you look at extended hours, you can see that we hit 1409. We topped out with the afternoon bounce attempt yesterday at 1747. We got that higher low at 1425. Go back and watch that video yesterday because we were looking for that higher low, and that's pretty much where I put my mouse. And again, that's just an estimation of where the higher low is going to form, but it's when we know what to be looking for and then we see what we're looking for happening that we can get confident in that trade. So if we were anticipating a higher low to form in this area, we see it happen, and then we see the bulls break to a higher low on the hourly and then a higher high by breaking 1475. It's a lot more confidence to go off of if it's playing out, rather than looking at it and saying, oh man, it's running away without me. Do I get in now? you're saying, okay, I'm looking for an hourly high or low to start the day compared to 1409, and then a bull break of 1475 will be an hourly trend change, giving us that daily high or low. So it's being prepared and knowing what to look for. And again, it's your ideal scenario, and you're waiting for the trade to come to you, and you're saying, if I get that high or low and bull break, I'm going to enter the trade, and if I don't, then I'm not going to enter the trade. And that's how it's easy to act on conviction if you're prepared. And again, what you're seeing is what you anticipated to happen. So from here, we're a bit extended, heading up towards resistance of 1607. It's going to be key tomorrow. If we can't break 1607 tomorrow morning in the first 30, 60 minutes of trading, we have to watch for potential consolidation. And just looking at the 4-hour time frame, we could very easily see an equilibrium in this scenario with our high, low the pullback. If we can't break 1607, we form a lower high, and we look to pull back and form a higher low, perhaps in the low 15s, upper 14s. So key resistance test first thing tomorrow morning for Cron, and we'll see if the bulls are able to get that follow through or not. Checking in on APHA, still pulling back, tightening up here, volume very low. 907 is support. We have an inside bar to be watching into tomorrow. And essentially, we just have a very tight pattern. This is absolutely one that you should be watching into tomorrow because it's nice and tight. We have our low, just a lower high up here at 940, higher low down at 914, and then a little lower high at 935. So 935 and 940 need to break for a clear bull break, and we need to see a volume spike associated with that break. And a bear break would be 914 and 907. Break certainly anticipated tomorrow with how tight we currently are. So that's a top watch due to the tight pattern currently. TLRY also started to shift that momentum. We were looking for it to do the same thing as ACB, but not as hopeful because of how much we have pulled back on this daily consolidation on TLRY ever since those shares became free trading. But the hourly time frame, looking for the trend change, we had not really a clear change of trend at this point, and still cautious. This could be a bear flag on the daily time frame. If we don't get much follow through over $75, we pretty much have to see a move up into $80 range in order to not be a daily bear flag. If we just see this weak bounce attempt and we see higher lows and higher highs on the hourly, but with not much follow through, for example, we saw a bull break here of 50 cents without any follow through after that, that's when we zoom out and look for potential flags. So it is a potential bear flag, and we'll see tomorrow is going to give us a lot more information as to whether or not that's going to remain a bear flag. CVSI, beautiful break. And I actually did play CVSI today. So I was out during the ACB bull breaks, but I came back middle of the day and saw an entry opportunity that I liked on the 5-minute time frame for CVSI. And it was just an easy one to use this base of consolidation right here on the 5-minute time frame. We got the bull break to start the day. Then we saw an equilibrium, and I entered here with a short-term stop level under 494, which was a double low of consolidation. And then once we got the bull break, I exited a I exited a small amount of my position, 25% of my position after a couple percent move in order for my break-even stop loss level to be down in the low 490s now, and trying to swing this position. And the reason I'm trying to swing the rest of my position is because this is a weekly bull break. And the volume today is very convincing that a lot of people were responding to that. So remember this equilibrium, and this is a trade that we've been scouting for weeks and weeks, probably months at this point. High, low, lower high, higher low, lower high, higher low, lower high, higher low. Bull break was at 489. So yesterday we came close to a bull break, didn't get any follow through. Look at the volume today. Double the volume of any day recently in the past month plus, and clearly responding to that break. And after 489 and 5 psychological, the next resistance is 560. So any consolidation on the daily time frame from here, as long as it's above 405, the bulls have a higher low. I personally am using a smaller position for this play. The reason being, it is a lot wider in terms of percentage swings. We just bounced 20% plus in 4 days. So if we consolidate on the daily, we can pull back 10% and still form a daily higher low. So again, you don't want to expose yourself to that significant of wild percentage swings with normal position sizes where, you know, if you're just looking to scalp 1%. So hourly support on CVSI, consolidating into the end of the day, didn't get that strong close the bulls were hoping for, but bulls are just trying to form an hourly higher low compared to 494. And key support 494 short term, key resistance 519 high of the day heading into tomorrow. And I will only exit this position if we lose the daily uptrend, and we are looking pretty good in terms of that volume. TGOD, bull break and follow through. So we're going to look at a couple different examples now between TGOD, HEXO, and NBEV, where they're all similar setups, but they played out differently. So here is TGOD, where we're looking for the hourly trend change to indicate the daily high or low had been established. We had the low of 277, high of a bounce, 288, which was just a lower high, held support by a penny, 278, bull break when we broke 288. That changes the hourly trend. That gives us the daily high or low. If you acted on 288, let's say you got in at 290, you're currently up 20% in a very short amount of time. So that is ideal follow through. We had continuation every day with higher lows and higher highs and increasing bull volume, big spike in volume today, and just a very clear follow through move with the next resistance we're looking at up at 371 from here, and 352 is resistance as well. So we only broke that by a penny. That's a double top, and then we're looking up at 371. So a very notable bull break on the daily time frame. Hourly chart, short-term support is 340 and then 332. Ideal scenario tomorrow morning is for the bulls to hold 340 and break 353 for continuation. If not, we're going to consolidate and look for a higher low on the hourly to form. And now on the daily time frame, bulls have space to work with. Anything above 277 on the daily is a higher low. So that's a perfection follow-through move on the hourly trend change and then continuation on the daily. Here's HEXO that gave a bit of a fake out. And this is one of those examples where technical analysis and charts aside, we have to use logic. So logic is XO just had dilution news that led to this pullback. And we only saw 1 day of the pullback before that fake out on the hourly trend change for the bulls to try and see continuation. We also have the information that ACB just had similar news and they pulled back for 5 days of consolidation. So just right off the bat, to assume that the HEXO bulls are going to see 1 day of consolidation on that negative news and then change the trend and go right back to bullish, it's not likely. So we have to be more skeptical of the bulls in that scenario. And another factor that would keep us skeptical, so here is our low pullback of 688, high of the bounce attempt, we topped out at 728, higher low at 696, and a bull break over 728 was the hourly trend change here. But if you look at the details, that bull break happened on 1 5-minute candlestick to start the day. And if you're going to get fake outs, it's going to be more likely to happen in the first 10-15 minutes of trading. That's when you have the biggest influx of volume and the most volatility. So we had bull volume to push the price up. We broke resistance by 8 pennies, and then we saw no follow through. We broke resistance by 8 or less than 8 pennies, 5 penny resistance break. So a 5-cent resistance break, and then 25 minutes later, we had already given up at that point 26 cents from the high of the day. So we broke resistance by 5 cents and instantly pulled back 26 cents. That's a red flag. We then saw the bulls try and see continuation. They set a lower high and then they dropped down and dropped to a lower low. That's another significant red flag. That shows us no follow through. The bull break occurred on 1 5-minute candlestick, instantly pulled back hard, and then saw no follow through. So we're still clearly in daily consolidation. We closed near the low of the day today, and we still need a higher low compared to 601, and bulls have not found that higher low yet. Decent amount of bear volume the past couple of days on this pullback, but still anticipating the bulls will hold 601 at least initially. If we pull back any more from here and pull back under 650, let's say, then we're going to be watching for the potential of a head and shoulders pattern where we'll look for the right neckline to still be a higher low. We'll look for a bounce and an inability to break the recent high of 760. We'll look for a lower high to form. And then if we lose the daily uptrend, that's when we zoom out to the weekly chart and look for weekly consolidation as a bearish reversal candlestick is currently forming on the weekly time frame. So we had a perfect example of follow through, a fake out example, and now here's NBEV, which saw the same daily higher low established. The hourly time frame changed the trend with a little bounce. Extended hours doesn't change that much. So we saw a bounce, little bull flag, and then continuation. And the bulls are keeping the hourly uptrend in their favor at this point, but it's not a significantly bullish follow through. We don't have increasing bull volume. So this is the kind of scenario where we say, yeah, we got our hourly trend change, but we're not as confident as we were with, TGOD because of the lack of increasing bull volume and the lack of confidence at this point. So to get some more confidence, the bulls need to hold 648 first thing tomorrow morning and then break 670 for continuation. If we don't hold 648 and we drop down towards 632, the next support after that, we have to be cautious of a daily bear flag, which would be significant pullback, weak bounce attempt, and then continuation down. So the range to be watching, 648 first thing tomorrow morning. We'll see if the bulls can hold that level. And this might be, we had a perfect example, a fake out, and this might be an example somewhere in the middle where we do get a bit of follow through, but it's weak follow through and we don't get much of a bounce on the daily. We'll have to see what tomorrow gives us. That's going to give us a lot of information. And on the daily chart is still straight across sideways. Let's actually look at MedMen first, because MedMen and bulls are hoping that MedMen is a glimpse into the future. Very similar charts on this daily consolidation. MedMen got a bull break today of the first resistance level of 420. We closed at the high of the day. Bulls want to break 434 tomorrow to get convincing follow through. We held support of $4. That was our baseline. That's a bottom fishing play. If you enter at 405, 408, you're risking 1 or 2% before you get stopped out. And at this point, the reward is much more than the risk is. Or I should say, before this move happened. If you were bottom fishing $4 support, the reward far outweighed the risk. So the volume spike is there as well. That's exactly what the bulls want to see on a convincing break. And the close at the high of the day shows that momentum. And we'll see if we get that follow through into tomorrow. Have to break 434 for a very convincing follow through move. After 434 is 451. Hourly support was not established. We're extended on the hourly time frame. Bulls need healthy consolidation for an hourly higher low at some point tomorrow. And that bull volume looks like it was at the end of the day. Not sure if there was news behind that. Actually missed the fact that end of the day move all happened in about 45 minutes. So I'm going to have to double check after I finish this video, see if any news came out, but obviously very extended in the short term as we head into tomorrow. And so we have not broken yet. Key support is 131 with a double bottom. If you were to enter right now at 135 and put your stop under 131, you're risking about 5 cents. And if we get a bull break, it's 139 as a double top and then 143. So risking maybe 5 cents to the downside, and bulls would hope for a break of 143 to try and see 10 cents plus to the upside. So that would be risk to reward 2-to-1 if we get the bull break here. And again, we need to see the volume spike just like we saw on MedMen. Break is imminent here on N. If it doesn't break on Friday, I would absolutely expect a break on Monday. So lots to cover. There are even a whole bunch more tickers that we could cover here. But as of right now, these are the names that stood out for me today. N is extremely tight. MedMen bull break at the end of the day, trying to see follow through on the daily chart, but we might need an hourly higher low to form. Key 434 resistance. NBEV daily chart change momentum, higher low clearly established, but it's a weak bounce at this point. We need increasing bull volume and follow through. Otherwise, we have to be skeptical of a bear flag. Hexo on the daily time frame, still consolidating. No higher low established just yet. Need a more convincing hourly trend change, and we have an example of a fake out on that first 5-minute candlestick. T-God, perfection daily follow through, increasing bull volume multiple days in a row, close near the high of the day with a short-term hourly support of 340. CVSI, weekly equilibrium bull break. This weekly equilibrium at this point has been forming for about 6 months or so, and we want to see follow through here as well. Bulls would love to break 519 tomorrow, but keeping in mind that we have bounced 20+% in just 4 days. So the bulls are already a little bit extended into that resistance break. TLRY, weak bounce attempt, potential bear flag as well. APHA, extremely tight on the hourly, worth watching tomorrow for a break of that tight hourly range. Cron, watching 1607 key resistance, potential 4-hour lower high if we cannot break that level tomorrow morning. And we'll look for a 4-hour equilibrium if we cannot. ACB, strong close, daily higher low clearly established. Bulls want to see some follow through tomorrow. And we are looking for a lower high on the daily chart, so bulls don't want to get too greedy and have to be cautious of a loss of the hourly uptrend, indicating the daily lower high is set. WED, 4-hour higher low pattern, very much intact. Daily chart still favoring the bulls as long as that 4-hour higher low pattern holds. Hope you're well. Do some good things out there. We'll see you soon.